Okay, we will proceed. Okay, before proceeding, we just do small revision of advanced variances and then we can proceed. We have very few left. In material, we'll go more deeper. In sales, we'll go more deeper. Something else we will see in material, labor, and sales. There is a 5 to see. Material will go more deeper and see. In sales, we'll go more deeper and see. Other than that, we have separate concepts where we see material, labor, and sales separately. 5 things we have to see, and we're done with this chapter. Before proceeding, we'll just go through a small revision. What variances come under material variance? Material price, material usage. Material price variance, what is the formula? So first, before that, what are the two mantras we saw? We have to remember. AQSP, that is outside if quantity comes, it will be actual quantity. That is AQSP. Outside quantity comes now, you should take actual. Outside price comes now, standard. Outside hours comes now, actual. Outside rate comes now, standard. Understood? Okay. Second mantra. A standard hours or standard quantity is given. It is standard hours or standard quantity for actual output. In sales, will we have standard hours or standard quantity? We will have budgeted quantity. That is very important to see. Okay. To start with material, what are the two material variances? Material price variance, material usage variance. Material price variance, what is the formula? Price minus actual price into quantity. Good. What is material usage variance? Standard quantity minus actual quantity into standard price. Standard price. What are two labor variants? Labor rate, labor efficiency. There we have price and usage. Here we have rate and efficiency. Labor rate variance, what is the formula? Standard rate minus actual rate into actual hours. Next, what is labor efficiency variance? Actual hours into standard rate. Next, variable overhead variance. Copy paste of that you will write. Next, fixed overhead variance. What are two fixed overhead variance? Fixed overhead expenditure variance. Fixed overhead volume variance. Fixed overhead expenditure variance formulas. Budget fixed overhead minus actual fixed overhead. Fixed overhead capacity variance. Fixed overhead volume variance is classified into what and all? Capacity variance and efficiency variance. Efficiency variance copy paste about no problem. Capacity variance, what is the formula? Budget hours into the only place where we use actual minus budgeted. Every other cost we will do standard minus actual, but in the only place we will do actual minus budgeted. Understood? Very, very important, because capacity, if you use more than the capacity, is good for the company. We can recover more fixed cost. Understood? Next, we saw sales variance. What are the two sales variants? Price, sales, volume variance. What are the sales price? What are sales price variance? Actual price minus standard price into actual quantity. Next, what is sales volume variance? What are two things that are sales volume variance? Oh, we saw only sales volume variance. What is sales volume variance? Budgeted quantity into standard margin. Standard margin. If it is absorption costing, what is the standard margin? If it is marginal costing, what is standard margin? Contribution. Standard contribution. That is all of you. Now we are going to see a small theory on when you should consider a variance. You tell. You found out variance. You did something, found out a variance. When will you consider variance? First, favorable or adverse. Most companies will choose only adverse variance. Favorable variance, we will not think about it. They will look at only adverse variance. Second, what is the second factor to look? The factors you will consider after you found out a variance. You found out a variance, whether you will actually take it or not. What are the cases in which you will actually consider the variance? Oh, variance has happened. What all factors you will actually consider the variance? First, if it is an adverse variance, most companies, if it is an adverse variance, they will consider the variance and do something according to it. Second case. Size of the variance, 2 rupees, 3 rupees, you will consider. Certain variance you will consider. So, based on the size of the variance, you will see how much you can put effort to it. More variance, higher variance, you will consider. Lesser variance, you will actually not consider. Next what? Cost. So, variance is 500 rupees. To investigate into variance, I have to put another person for 25,000 rupees salary. Will I do that? Variance is 5,000 rupees. To consider to put, for example, I have a shop. I am cooking something. daily 100 grams of sugar is getting lost. Daily 100 grams sugar is getting lost. Someone is eating the sugar. To check that, I have to put a person to check, new person to check who's eating the sugar. Sugar 100 grams cost will be 30 rupees or whatever. For that, I have to put another person. For whom I have to pay a salary of 10,000 rupees per month. Will I do that? Yes. Sugar, let it go. Minor variance. For this, if I put another person, I have to pay more salary and see who's eating or not eating. Understood? So I check the cost of the variance. Last one is past patterns. Don't see variance only for this month. See variance for if variance is only for this month, leave it. See all past pattern and trend. Throughout the past, there is labor rate variance. So then check labor rate variance. Today only you have some problem with labor rate variance. Don't check. Throughout the past, if you had a problem with labor rate variance, you check the variance. So what are the 4 factors to consider? 4 factors when you will consider a variance in a business. First one, whether it's adverse or favorable. Second, size of the variance. Third, cost of the variance. Fourth, past pattern. Fourth is past pattern. The size of the variance, we can see 2 sizes. Okay. First is fixed size of variance. Second is fixed percentage. First is fixed size of the variance. Second is fixed size means I will keep a threshold limit. We will consider variance above 5,000 rupees. In audit, you will see some concept called as materiality. What materiality means is, as auditors, when we go and audit a company, when we audit a financial statements, suppose they have written land and building as 10,000 rupees or $10,000. When you audit, the land and building should be valued only at $9,700. How much difference is there? $300. But the problem is, before me going to that audit, as a team, we will sit and set a materiality. That is, we will check items where defect is more than 500 rupees or $500 or 5%, whatever it is. Less than that, we will not consider only. So, same way, 2 types can happen. Either fixed size can happen or fixed percentage can happen. Fixed size means we will tell investigate all variances above 1,000 rupees. Investigate all variances above 1,000 rupees. Second, fixed percentage. Investigate all variances above 5% of your budget. Budget or standard is 100 now. 5% of it is 5. Anything more or less than 5, you investigate. So it can be based on fixed size, it can be based on fixed percentage. Now tell me, what are the 4 factors to consider in case of variance? Adverse or favorable, size of the variance. Under size of the variance, what are the 2 factors? Fixed size of variance, fixed percentage of variance. Next, cost of investigating the variance. Cost of investigating, if it's more, you will not do. Okay, next. Consider past pattern or trends so that based on that you can investigate the variance. Only this time it's there, no problem. Throughout the period it's there, then you investigate. Understood? That is what we have to see. Nothing more is there in this. Nothing more is required also. Now we can proceed to the next concept. So now we will go to material variance. All these while, did we see 2 material? No, did we see 2 material? Did we see 2 material? We've seen A and A material, B material. For them, we will do material price variance, usage variance. For material B, we did price variance, usage variance. What happens is, to make one plate of pizza, you need 50 grams of cheese, 100 grams of maida. How much? 50 grams of cheese and 100 grams of maida you need to make a pizza. What happened is, they used 120 grams of maida and 40 grams of cheese. Is it good or bad for the company? Good only. The cheese which costs less, costs more, we are using less. Maida which costs less, we are using more. So no problem. But quality will get affected. That is one problem. But technically, if you see, the item which costs less, we are using more. The item which costs more, we are using less. So here there is a problem in mixing. That is, the problem here is When we mix two products together for making another item, we are using more of one and less of one. If you have one material, no problem. One material, what problem we will have? If you have only one material, what problem we will have? We will using more or less of the item. If you have only maida, what problem we will have as a variance? We will either use more maida or we will use less maida. But when you have two material and when you are mixing it, you have two problems. One, the usage problem will be there. But the second problem is when you are mixing it wrongly. More of one and less of other you are using. Understood? So that we have to consider. So material, now we are going to classify it more. Material price variance will remain the same, no problem. Material usage variance is there, no. That will classify into two. One is material mix variance, one is material yield variance. So now material usage is classified into what? Material mix variance and material yield variance. Understood? That is what we are going to see now. After this, we have another variance called as we have the same thing with sales also. We have the same thing with sales also. Understood? Exactly same, no change will be there. Now coming to material mix variance. Don't write anything, visualize. Don't see anything, visualize. Material mix variance, what is the problem here? The material mix variance, what is the problem here? The material mix variance, what is the problem? Mixing of two things. Using more of one item, using less of another item. Or using more of both items. That problem we will not have here. Material mix variance, what problem we will have is quantity will remain the same. We will take the quantity as the same. Mix we will compare. For example, earlier how much of standard, how much of actual we had to use? 100 grams of maida, 50 grams of cheese we have to use. 100 grams of maida, 50 grams of cheese we have to use. Now we are using 110 grams of maida and 40 grams of cheese. So here the mix is varying. That mix only we will consider here. I will tell you what we will do. For example, first to do this question, we have to find mix of both the products. Mix of both the products, that is the ratio. For example, standard mix. What is the standard mix? I told you. Standard mix is what? 100 is to 50. When using 100 grams of maida, make sure you use 50 grams of cheese. Now what is happening? Actually what is happening? 110 grams of maida and 40 grams of cheese. Or let it be even 30 grams of cheese. 120 grams of maida and 30 grams of cheese. Now we are doing what? We are using 110 grams of maida and 30 grams. So what is the ratio? First is 100 is to 50 or 2 is to 1. Second is 120 is to 30 or 4 is to 1. So 2 is to 1, it became 4 is to 1. What we will do in mixed variance is, we will keep the quantity as actual. We will keep, what is the actual quantity? Actual quantity used 120 plus 30, 150 we used. Actual quantity used is 120 grams of maida and 30 grams of cheese. What is the total quantity used? 150. We will keep the quantity same. We will leave the quantity. Whatever standard quantity was, we will leave that. That we will take in yield variance. Here, quantity will keep as actual quantity. What is actual quantity used? 150. What is actual mix happened? 110 and so 120 and 30. So actual quantity, actual mix is 120 and 30. Actual quantity in actual mix. That is what actually happened. Actual quantity and actual mix is what actually happened. What actually happened? 120 and 30. Now we have to find out actual quantity in standard mix. What is actual quantity? 150. Then put it in standard mix. What will come? 100? 100 is to 50. Actual quantity total is how much? 150. That you have to split in the ratio of standard mix. What is standard mix? 2 is to 1. That is 100 is to 50 or 2 is to 1. So that 150 rupees should be split in standard mix. That is 2 is to 1. So that is called as actual quantity in standard mix. So here if you see, always in cost variance, we will compare actual and standard, or standard and actual. Standard actual. In all cost variance, we will do standard minus actual. The same thing we will do. Both will be actual quantity. Okay. Actual quantity in standard mix minus actual quantity in actual mix. You have to multiply that by what? Quantity you will multiply by what? Standard price. All of that. You will take actual quantity in standard mix minus actual quantity in actual mix, multiply by standard price, you will get the variance. This you have to do for every material. Material A, material B, material C, actual quantity in standard mix minus actual quantity in actual mix, you will get one difference, multiply that by standard price, you will get the variance to the total of the variance. 100 minus 120, negative 20. Take the standard price of maida, multiply by negative 20 with the maida price, then you get the difference, add all the two differences, you will get the total of variance. Just visualize this for now. Believe me, visualize this question, visualize how you are going to do it. After that, when you see, it will be very easy. The most easiest part of entire subject is this only. But you have to visualize now. Okay. Understood? This is material mix variance. The problem is there in mixing. Material yield. Material, next we will go to material yield. Same way again for material yield also you have to prepare a table. Okay, first tell me what and all comes in the table. First material. No. In the table. Material mix variance, we have to prepare a table. First we will take material name. Next we will take ratios calculation separately. Next we will take actual quantity in standard mix. Next we will take actual quantity in actual mix. Then if you minus both, you will get difference. You will get difference. Then you will take standard price. The difference into standard price, you will get a variance. Add both the variance, you will get the total material mix variance. Understood? Again tell what is the table we will prepare in material mix variance. Material name, actual quantity, standard mix, actual quantity, actual mix, difference, standard price, and then you will get variance. Total of variances are material mix variance. Sir, in yield method, material yield, here mix remains the same. We are not talking about mix here. Mix here is standard mix. In material yield variance, mix here is standard mix. We will talk about the difference in the quantity. In our case, we didn't have difference in the quantity. Standard quantity was 110 plus 40, 150. Actual quantity was 120 plus 30, 150. We didn't have any difference in the quantity, but some cases there will be difference in the quantity also. So here we will compare, mix we will keep the same as standard mix. Here we will compare standard quantity in standard mix minus actual quantity in standard mix. So mix is standard mix. Actual quantity and standard quantity, standard quantity and actual quantity will compare. Understood? Same thing. There we compared standard mix and actual mix. Standard mix and actual quantity, actual mix and actual quantity compared. Here mix is remaining the same as standard mix. Mix is remaining the same as standard mix. Here we will compare the quantity. Standard quantity in standard mix minus actual quantity in standard mix. Understood? So what will be the table here? Material name. Second is, first what we are comparing? Standard quantity and actual quantity. Okay, so second column will be standard quantity in standard mix. Third quantity will be actual quantity in standard mix. Mix will remain the same. Don't compare mix. Actual quantity in standard mix. You will get one difference. The difference into standard price, you will get what? Variance. Add everything, we get the material yield variance. Understood? Believe me, now when you open the question and see, it's going to be dead easy. Can you see? Can you proceed? First, go and see the table in page number, whatever your page number it is. Go to material mix variance and see the table now. You will understand more clearly. Go to material mix variance and see the table now. You will understand it more clearly. Understood? Easy, yeah. Can you do one question? One question if you do, you'll understand more clearly. Okay. Now come here. Come to test your understanding question number 8. Come to test your understanding question number 8. First, we'll go through the question. The standard direct materials to produce 1000 units. What is 1000 units? Hondru question. A standard direct material to produce 1000 units of output is as follows. What is 1000 units? That is output. That is pizza. 1000 units is not material. 1000 units is the pizza, is the output. That we will use in which case? To find the standard quantity for actual output, we will use that. But that they have given the question, that is the standard units. That is the pizza. That is not material. Material is maida and cheese. That is the pizza. The output is pizza. Understood? So don't even bring that inside material other than to find standard quantity. Next, we have 3 materials A, B, C. Quantities are given 600, 240, 360, and standard price is given. What is the 600, 240, and 360? What is the 600, 240, and 360? Standard quantity. Understood? So they are given to produce 1000 units. We have to use material A 600, material B 240, material C 360. So that is not only the standard quantity, that is also the standard mix we have to use the products in. So A, B, C should be used in the ratio of 60 is to 24 is to 36. So to produce some units, you have to use it in this ratio. 60 is to 24 is to 36. Understood, all of you? Next, during April, actual output was 21,000 units. The actual materials issued were given below. Actual material used, they are given below. This is the actual quantity in actual mix. Understood? Calculate the material mix variance for each material. We will do one by one. What is the first column we will use? First column we will take. You just visualize, then you can do. I will give you time to write. First, what is the first column? Material. Name. A, B, C. 3 material. Next, what we will do? What is the heading? What is the table for material mix variance? What we are comparing in material mix variance? What mix and what to mix? Standard mix and actual mix. Quantity will remain what? Actual quantity. Quantity will remain the same as always quantity. Quantity means actual. Quantity means actual. Actual quantity in standard mix and actual quantity in actual mix. So first we will take standard mix and actual mix. Actual quantity in standard mix. Third column is actual quantity in actual mix. Next difference. Next standard price, not rate to labor, and then you'll have variance. Always it is suggestible to write the third column first. What is third column? Third column, actual quantity in actual mix. Third column, actual quantity, actual mix are because that they'll directly give you the question. We don't have to calculate anything. Go to the question and tell me what is the actual quantity in actual mix. The actual quantity is actual mix. 14,000, 5,500, 5,500. Add everything and tell me what is the total you are getting. Add everything and tell me what is the total you are getting. 25,000. Good. We're done now. Now we have to find actual quantity in standard mix. Actual quantity in standard mix, how we will find out is, we will take the total actual quantity that we will split in standard mix. We will take the total actual quantity that we will split in standard mix. What is the total actual quantity? Apo, you tell me this alone. Think and tell what will be the total column in column number 2. 25,000. Because second column we are again taking actual quantity only. Second column we are taking actual quantity in standard mix. Mix is only changing, but quantity is remaining the same. So second column total will also be 25,000. Third column total was 25,000. No, the second column total will also be 25,000. I'll write that down. Now that I have to split in the ratio of what? What is the standard mix? 60 is to 24 is to 36. Now the 25,000 should be split in the ratio of 60 is to 24 is to 36. Take your calculators, split and tell me how you will split this. 25,000 into 60 divided by total is how much? 60 plus 24 plus 36 is 120 divided by 120. If you do, you are getting how much? 12,500. Same case you do 25,000 into 25, so 24 divided by 120. You do, you will get how much? 5,000. Same way you do 25,000 into 36 divided by 120. You know how much you're getting? 7,500. So quantity is remaining the same. What mix changes that? Nothing we are seeing here. What you are seeing here is, okay, suppose we use same quantity. How much mix difference is that is what you are seeing here. For that quantity we used, how much mix we should have used, how much mix we actually did, we are comparing both. We compare both, you will get difference. What is the difference? 12,500 minus 40,000 is how much? 12,500 minus 40,000 how much? 1,500 negative. 5,000 minus 5,500 is what? 500 negative. 7,500 minus 5,500 is what? 2,000 positive. So if you see 1,500 negative, 500 negative, 2,000 positive. If you add everything, you get 0. So difference will match because quantity is remaining the same, so there is no problem with quantity. 1 minus is there, now 1 plus will be there. If I use 2 kgs more in maida, I would have used 2 kgs less in cheese. Understood? So quantity there will not be any difference. Here the difference only in the variance. Standard, what is standard price per kilo? Everything we took here is per kilo only, no? So you have to take the standard price per kilo. What is standard price per kilo? 1.1, 2.4, 1.5. You multiply this and this. 1,500 into 1.1 is how much? 1650. 1650. 500 into 2.4 is how much? 1,200. 2,000 into 1.5 is how much? 3,000. You add everything. This is negative, negative, negative. You add everything, you will get your total material mix variance. Understood? Always you should try to visualize answers. When you visualize answers only, you will, when you're doing the answer, it will be more easier. Okay, can you do? I will give you not literally calculation also we did. Our target time for this question is 3 minutes. Take your book and pen and literally complete the question in 3 minutes. Do it fast. We know everything. First write the format, copy paste. First what column you have to write? Name. No, not that heading, not heading. First column, what column you have to fill? Actual quantity and actual mix. Only if you do that, that directly given as the question. Only if you do that, you get the total of that. With that total only you can find out this. Okay. That we will take right first. Column that we will write first. But filling the part we will do this first and then we will come to this. Do it fast. 3 minutes time. Literally 3 minutes time to do this question, not more than that. This right AQSM, AQAM. AQAM is actual quantity, actual mix. AQSM is actual quantity, standard mix. First write the third column, put total of that. That total you copy paste to the second column and then you do it all of the mix. Yes. What is the second column? Separate order wise. Actual mix, exactly. Normally, all cost variance, if you see, is subtracted standard and actual only. Completed. What are the variance you got? 150 favorable. Positive. Positive means favorable. Positive only got it. Understood all of you? Okay. So time's up. Listen. I will now we will analyze in deeper and we will see why we got 150 favorable. You tell me why we got 150 favorable. Why we got a favorable mixed variance? What is the reason? Why we got a favorable variance? Look at the question and tell me what is the reason. Okay. That we used more. You got negative. That we used more. That is standard mix. Standard we should have used 5,000, but we actually used 5,500. So we used more of that product. I'll tell you, listen. Correct. This is a ulta thing. So more quantity, more price product, we used more. So because of the adverse variance we should get no. But that is only 500 units. But compare this 1,500 and 2,000 units. So the price which is 1.1, we've used 1,500 more. But the price which is 1.5, we've used 2,000 less. For lesser price item, we've used 1,500 more. For higher priced item, we've used 2,000 less. Because of the differences, and find the less quantity. Find the correct only. Less quantity, not much difference. Higher quantity items, if you see, 2,000 for 1.5 rupees item, we use 2,000 units less. Because of that, we are getting a favorable variance. Understood? This is what material mix variance is all about. Now, tell me material yield variance. What are the 5 columns we prepare a material yield variance? Material name. Here we will compare what? Mixa quantity. What quantity will compare? Standard quantity and actual. Always standard mix, standard quantity, actual quantity. Standard quantity in what mix? Standard mix. Mix is actual, standard. Only for quantity it is actual. Above both will take actual quantity. Here both will take standard mix. Above for both will take actual quantity. Here for both will take standard mix. So we will compare standard quantity and actual quantity. We will take standard quantity in standard mix, actual quantity in standard mix. Mix will remain the same as standard mix. Standard quantity in standard mix, actual quantity in actual mix. So difference is actual quantity. Difference quantity, you will get the answer. Understood? So first, we will visualize and tell. Product name, material name. Second column is standard quantity in standard mix. Third column is actual quantity for standard mix. Fifth column is difference, price, variance. In any of these columns, in the second and third column, does any column look familiar? In second and the third column, does any column look familiar? Third column is actual quantity in standard mix. We already found out in the material mix variance. So, go to material mix variance and look. We already found out actual quantity in standard mix. We took the total of actual quantity, we split in standard mix. It's already computed that. Update copy paste from there and write it here. Understood? What column is pending? Standard quantity in standard mix. What is standard quantities? Mantra. What is standard quantities? Mantra. Standard quantity for actual output. What is the actual output here? That is standard output. So actual output is 21,000 units. Actual output produced was 21,000 units. So you take the standard quantity for actual output. No. To produce 1 unit, how much material A is required? 600 is given for 1000 units. First, you have to find out how much we need for per unit. To produce, don't use calculator. Please don't use calculator. To produce 1 unit, how much of material A is required? 0.6. For 1000 kilos, for 1000 units, 600 kgs means 600 divided by 1000 if you put 0.6 kilos is required for 1 unit. How many is required for B? 0.24. For C, 360 divided by 1000, 0.36. These are all the standard quantity for 1 unit. Now we have to find the standard quantity for actual output, that is 21,000 units. So 0.6 into 21,000, 0.24 into 21,000, 0.36 into 21,000. If you do, you will get the standard quantity in standard mix. We found out the actual quantity in standard mix previously. Minus both. Take the difference. Take the variance. Then do the total. Understood? I will give you 3 minutes time. Please do material yield variance question fast. Come below, same questions they are given. Come to tested understanding question number 9. Come to tested understanding question number 9. Come to tested understanding question number 9. Next question, not this question, next question. They are given the same question again and ask you to find the material yield variance. What is the yield variance you are getting? 296. Favorable? Correct. Do it fast. In previous case, when you took actual quantity for actual mix, the previous material mix variance, when you took actual quantity for actual mix, what you took? Same. You took actual quantity. Actual quantity means it's actual quantity in standard mix. When you're taking actual quantity, it is actual quantity in actual mix. I actually use 100, 150, 120 means I actually use 100, 120, 150. Actual mix is 100, 120, 150. Same way here, when you take the standard quantity, that standard quantity represents standard quantity in standard mix. Output is different. Actual output is different. Output doesn't matter. We're taking standard quantity only. That standard quantity represents standard quantity in standard mix.
But it is like standard quantity actual output, right?
Output is different. Input is different. We are talking about input here. For 100 units of pizza, how much of maida we should have used, how much of cheese we should have used is what we found out right now. For 100 kilos, for 21,000 kilos, to take this case, for 21,000 kilos of pizza, or 20,000 units of pizza, for 20,000 units of pizza, how much of material A we should have used, how much of material B we should have used, how much of material C we should have used is what we found out as standard quantity in standard mix.
So that actual output here represents
Pizza. Actual output is not any mix. Actual output doesn't represent any mix. Actual output is pizza.
But we delete the standard quantity from standard
Mix, yes. We take a mix only. If you take standard quantity, it represents leave actual output. Normally, how will you find standard quantity? For actual output.
Yes, sir.
So that is how you find standard quantity. When you find that standard, leave that above part now. Now, when you find the standard quantity, that standard quantity only represents standard quantity in standard mix. When you're taking actual quantity, anywhere they have given actual quantity in actual mix? They just told actual quantity. What that actual quantity means? Actual quantity actually means actual quantity in actual mix. So when you find out standard quantity means standard quantity in standard mix. Understood? When you find a standard quantity, it represents standard quantity in standard mix. You have to find out further. Okay, just keep a pen stone for 1 second. I will tell you another method to find yield variance. We can use two methods to find yield variance. This is the method we found out is what we are going to do in exam forever. And I will tell you another method to find yield variance. Just 1 second. Other method to find yield variance is logical formula. Listen. How much output I should have produced minus how much output I produced. Tell. How much output I should have produced minus how much output I produced. From 25,000 kilo, kilo, how much total material I used? Total material, how much I used actually? 25,000 kgs I used. How much I actually produced? How much output I produced? Keep that aside for a second. First one is how much output I should have produced. For 1 unit, what is the total material required? Of all three together. For 1 unit, I'll again tell you, for 1 unit, how much material is required for all three together? 1.2. 1,200 for 1,000 units divided by 1,000 you can do, or 0.6 plus 0.24 plus 0.36. I should have used 1.2 kilos. Total 25,000 kilos I used. Total 25,000 kilos I used. Divided by per unit I should have used 1.2 kilos. So how much output I should have produced? 25,000 divided by 1.2, I should have produced 20,833 units. How much I actually produced? 21,000 units. What is the difference? 166.66, 167. Difference is 167. Difference is 167. So now what we have to do is, we have to find out the cost per unit. The cost per unit. To produce per unit, how much material is required? 1.2 total. Per A how much is required? B how much is required? C how much is required? Now tell me, A, what is the cost for per unit? What is standard cost of A per unit? How much is required? 0.6 is required. Into 1.1 is the cost per kg. What is the cost of A? 0.6 into 1.1. M plus. We'll keep it aside. For B, 0.24 into 2.4. For C, 0.36 into 1.5. We add everything, what are you getting? $1.776 or 1.78. 1.78 is what we are getting. It should have been the cost per unit. How many units difference we are getting? 167 units difference we are getting. 167 into 1.78 you put. 167 into 1.78 you put. You get how much? 297 point. From your question, what you got? From your method? Almost similar. Mostly similar only you will get. Any method you use, you get same answer only, but we will know both methods because in some case you will be able to use first method, in some case you will be able to use second method. Second method, we will again go through the second method. What we are comparing? How much we should have produced minus how much we produced. Always standard first. Actual is always second. How much we should have produced minus how much we produced. How much we produced, how much we used material 25,000 kilos. With that, how much we produced? 21,000 units we produced. Keep that aside. Coming to how much we should have produced is 25,000 units we used divided by per unit we should have used 1.2. 25,000 divided by 1.2, what you are getting? 20,833 is what we should have produced with 25,000 kilos of material. 20,833 is how much units we should have produced with 25 kilos of material. But we produced only 21,000. We produced 21,000 units. We produced 167 units more. We have to find the cost of the 167 units. We have to take per unit. For per unit, how much is required into price. How much is required into price. How much is required into price. If you do, you will get the total price required. That is 1.2. 1.2 into 167. If you do the total yield variance. Understood? These are two methods in which you can find out the material yield variance. Understood all of you? Now come to question. Tested understanding question number 10. Come to tested understanding question number 10. Someone read the question, no? What is A and B now? Material used to produce one component. Okay. Sorry, material used to produce one chemical. It will be very clear. Company uses two components to produce a chemical. So A and B are used to produce a chemical. Okay. Standard information they have given for 1 unit. In previous case they gave for 1000 units. We had to find it for 1 unit. In previous case, but here they gave for 1 unit directly. Super. Next. What does it mean? 10 kg at 4 per kg. What does it mean? What is the 10 kg? Tell in terms. Leave that. Tell me in what is the 10 kg? You tell me. Exactly. For 1 unit of material, we need to use 10 kg of material. Standard. What next? Okay. 4 rupees per kg. So total cost of material A to produce 1 unit is 40. Total cost to produce material B is 120 to produce 1 unit. Understood? Total given. And below what are they given? Below read. What is that? Output. That is above you told you to read. Chemical you are producing, two components you are using. So chemical they given it is an output. Super. Okay, next.
Using 1000 kg of material.
Yeah, and one. What is this? Actual mix. The actual quantity in actual mix. That is third column. Actual quantity of material. Actual quantity in actual mix. Understood? Now we'll go one by one. Material mix variance. What are the three columns you will use? What are the three? What are the 7 columns? Material name. Material mix variance. Actual quantity of standard mix. Quantity for actual mix. Difference. Variance. Difference price variance. Difference what price? Standard price. Always when you multiply outside, there's nothing but think this as a usage variance. Comparing two quantity, standard and actual, you're multiplying by standard price. Think this as a formula only. One formula is divided into 3 parts. That's it. Okay. What column we will fill first? Any of the mixed variance you do, always in this variance you always you will fill the third column. Actual quantity in what is actual quantity in actual mix? 1000 and 1460. Next, what you have to do? Put total of that. Total how much you are getting? 2000. Don't use calculator. How much total you are getting? 2460. Update copy paste that column total for what? Second column. Update copy paste that total and put it in second column. Second column is also actual quantity in standard mix. So quantity is remaining the same. Copy paste the third quantity is total in second column. That is split in the ratio of what? 1:2 or 10:20. That is what you are supposed to use. Standard mixes 1:2 or 10:20. You split that, you write that, then you take standard price. What is standard price? Tell me what is standard price? Mix will remain the same. 1000 units, 10,000 units, 20,000 units, whatever it is, mix will remain the same. Mix will not vary. What? Tell me this. What is the standard price? Think and tell. 4 and 6 are 40 and 120. Who all are saying 4 and 6? Why did you put your hands down? When you are sure about the answer, you be confident. Who all are saying 4 and 6? Standard price. Multiply standard price, no. 6th column. That standard price, is it 4 and 6 or 40 and 120? Who all are saying 4 and 6? Who all are saying 40 and 120? Sir, when you minus 2, your 4th column, 5th column difference is kgs only, no. Kgs should be multiplied by the cost per kg only. Why will take the total price? That will be not required. You will always multiply by the cost per kg only. Understood? So you have to take 4 and 6 only. Multiply. I will give you again 3 minutes time. Please do material mix variance alone. Take 3 minutes time and do material mix variance. Do it fast. Take 3 minutes time and do material mix variance. Do it fast. You should not take more than 2-3 minutes. What is the material mix variance? 360. 360 adverse or favorable? 360 favorable. You follow the steps, you can do a question in literally 1 minute. Got 360 favorable? Got? 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 Okay. Now, material yield variance. Tell me the steps first. What are the columns we'll put for material yield variance? Material name, or is following the process is very, very important. Material name.
Standard quantity.
Here we're comparing what? In material yield variance, we're comparing what?
Mix. Yield is
Yield variance comparing what? Quantity. Or is what quantity minus what quantity? Standard quantity minus actual quantity. Standard quantity in what mix? Standard mix. Actual quantity in standard mix. Then difference. Standard price. Variance. Super. Which column we can copy paste directly? Third column. From where? From material mix variance. Actual quantity in standard mix. Copy paste from there. Put the total. Standard quantity in standard mix. How will you find out? Or actual output. What is the actual output? 160. How much we should have used for material A? 10 is 10 is per unit. So how much we should have used? 10 into 160. How much we should have used? 1600. What we should have used? Material B. 20 into 160. How much we should have used? 3200. 3200. Understood? Please do material yield variance. Please do material yield variance. Do it fast. Again 3 minutes time. Do it fast. We have one more question in material variance. After that, I'll give a small break. We have one more question in material variance. After that, I'll give a small break. Do it fast. Do it fast. You'll have confusion. Sir, listen for 1 second. Sir, we should have used 160 into 10, 1600. But we used how much? We used how much? Look at the question and tell. Look at the question and tell. We should have used 160 into 10. But we used how much? We used how much? 1000. We should have used 160 into 20. But we used how much? We should have used 3200, but we used 1460. So big, huge difference is there, sir. Abdin people will think, and they will think that they did some mistake. There might be huge difference also, no problem. You proceed with what you know, all of that. Don't get confused, sir. Understood? Proceed with the question. Proceed with the question. Understood, all of you. completed, what are the variance you got? 480. 480. Favorable or adverse? Why did you get a favorable variance? Same thing. How much we should have used? How much we used? We used very less. We should have used more, but we used very less. So because of that, we are getting a favorable variance. Understood? Sir, one more question they are asking. Calculate material usage variance. What is the formula for material usage variance? What is the formula for material usage variance? Minus actual quantity into standard price. Again, you can do that and find out. Or your mixed variance plus your yield variance together will get your usage variance. You can do whatever you want. In exam, do both. Do using the formula. Verify using this shortcut method. Understood? Can you proceed? Come to next question. Beautiful question. Come to next question. They are asking you to find the material mix variance and material yield variance. Understood? First, you do material mix variance. I will not stop you. You do material mix variance. I will help you do. I will help you during material yield variance. You do material mix variance. Material, actual quantity in standard mix, actual quantity in actual mix, difference, standard price, variance. Material S1, S2, S3. Third column first you have to fill. Fill now 8284, 7535, 3334. You add all of those, you are getting 19,153. Update copy paste this to the second column. Now this has to be split in the ratio of 8:5:3. 8:5:3. That is 19153 into 8 divided by 8 plus 5 plus 3 is 16. You will get 9576.5. 9576.5. 19153 into 5 divided by 16. You will get 5985.3. 5985.3. 19153 into 3 divided by 16. You will get 3591. 3591.2. 3591.2. Now you take the difference. What difference are you getting? 1292.5 positive, 1549.7 negative, 257.2 positive. Standard price given to us is what? 0.3, 0.5 and 0.4. 0.3, 0.5 and 0.4. You multiply both, you will get how much? You will get 387.75, 774.85 negative, 102.88 positive. You add all these three things, you will get 284.22 negative. This is your material mix variance. You can round off. In exam, when you're doing in Excel, better to take two decimals. Here you round off and write. In exam, when you're taking your finding, it's better to take two decimals because Excel we're doing now, so no problem. Do it fast. I completed the question. What is the answer you're getting? $1,265.7. Hmm? S1 is favorable or adverse? S1. Huh? 1 is favorable. Yes. Second one is adverse. What answer you getting? Second is? 0.75 favorable. Okay. Correct. How do you get 1,200? 2? 282, 284.22 I got, whatever. Understood? Material mix variance, no problem, sir, in this question. The problem in the question lies in material yield variance. So, material yield variance, what all columns we will put? Huh? Material name, standard quantity, standard mix, actual quantity, standard mix, difference. One by one we will go. Material S1, S2, S3. Okay. Second column is standard quantity and standard mix. Third quantity is standard quantity. I'll tell you, I'll give time to write. Third quantity is actual quantity and standard mix. Difference, whatever. Which column we will copy paste? Actual quantity in standard mix will copy from above. Tell me what is actual quantity in standard mix? 9576.5, 85.3, 3591.2. Okay. So what we will do? Leave that. Total is not required. Now we have to find standard quantity in standard mix. What is standard quantity formula? Standard quantity for? What you will technically do? How we found out in the previous question? 8 into 21, 8 into 15,408, 5 into 15,408, 3 into 15,408. You have to do the previous question. That's what we didn't know. But here, yeah, I'll tell you. Here, be very careful. One second. The kgs which is given to us, the standard kgs. If we do 15,408 into 8 now, how much are you getting? 15,408 is output. Into 8 if you put now, how much are you getting? How much we used? No, actually standard quantity, how will you find out? Standard quantity for actual output. Actual output is how much? 8 into what you should do? Into 8. If you do, how much are you getting? Output can mean kgs also. Output sometimes can mean kgs also. So when suppose you're selling flour. Your flour per kg only you will sell now. Output can mean kgs also. So 15408 into 8 if you put, so 1,23,000 kilos we have to use, but we used only 8,000 kilos. Doesn't something feel wrong? Come above and see standard cost details for a single batch is given, not a single output or single unit. Single batch, in one batch we might produce how many number of units we don't know. In one batch we might produce 10 units, in one batch we might produce 20 units, in one batch we might produce 30 kilos, we don't know. So in this case what you will do? In this case what you will do? Have they given how many units in single batch are there? They did not give. So in this case, they gave us another clue. They told a standard loss of 10% of input is expected. That is, if you put some amount, listen to me, if you put 100% inside a machine, 10% loss will happen, standard loss will happen, and only 90% will come out. So if 90% which came out is 15,408, how much we should have put in? 15,408 represents how many percent? 15,408 represents 90%. So 15,408 divided by 90% if you put, you will get how much? 17,120 is your total standard quantity which you should have used. 70,120 is the total standard quantity which material you should have used. Because when you put some material, generally standard wastage is how much? Standard loss is 10% and outside 90% output will come. So 90% output is 15,408. So 15,408 divided by 90% if you put, you will get how much? 17,150 standard, 17,120 standard total quantity you should have used. Is any ratio given in the question? Total material input. If you put 100% input, you will get 90% output. Look at the question. A standard loss of 10% of input is expected. If I put 100% of input, it will do some machinery work and output 90% will come out. Understood? So 10%, 100% if I put 10% loss, 90% will come out. So 15,408 represents 90%. Divided by 90% if you put, you will get 17,120, which is how much input you put. Yes. How are you taking for? Because here they are saying if you put maida, oil, salt, if you put it inside the machinery, if you put 100% of this inside the machinery, output 90% of maida ball you are getting. That is what we are selling. Or if I put 100 kilos of maida, oil, everything I am putting. 100 kilos of maida, oil and all I am putting inside a machinery. Output I am getting 90 kilos of chapati. Understood? 100 kilos of maida, oil, everything I am mixing and putting inside a machinery. I am getting 90 kilos of chapati. Chapati is output, but how much you are putting inside? You are putting 100 kilos of maida oil. That is input you are putting inside, output you are getting. So logical. And they clearly give the question also. A standard loss of 10% input is expected when you put it inside. Understood? So 17,120 kilos of material I should have used because 10% standard loss. How much loss happened we don't know, but 10% should be the standard loss. If standard loss has happened, we can find the standard input. So 15,408 divided by 90% if you put, you will get 17,120 as your total column in second column. What is the standard mix? 8:5:3 is the standard mix. That's 17,120. We split it in the ratio of 8:5:3. Standard mix. So totally I should have put 17,120 inside to get an actual output of 15,408. So 17,120, how much of everything I should have put? 8:5:3. 17,120 into 8 divided by 16. You will get one amount. Same way, do for all three, you will get standard quantity in standard mix. Take the difference, take the standard price. What is standard price? 0.5 and 0.4. Multiply, get the answer. Understood? Take 5 minutes time. Please do this question fast. With this, we are completed with material mix variance. Okay, sales mix variance. Normally material mix variance, what and what you will compare? Material mix variance, what and what you will compare? Mix it. Standard mix minus actual mix. Standard quantity, actual quantity, standard mix. Actual quantity, actual mix. Update put it ulta. Actual quantity, actual mix. Standard quantity, sorry, actual quantity, standard mix. Here comparing actual mix and standard mix. That is in sales mix variance. So sales volume variance is classified into two: sales mix variance, sales quantity variance. Sales mix variance, what are the two columns? Actual quantity, actual mix minus standard quantity, actual quantity, standard mix. You're comparing actual mix and standard mix. In material, you compare standard mix and actual mix. Here, you will compare actual mix and standard mix, whereas the quantity will remain the same as actual quantity. Coming to sales quantity variance. In material usage variance, so material yield variance, what and what you compared? Standard quantity and actual quantity, keeping a mix at standard mix. Standard quantity, standard mix. Actual quantity, standard mix. Here, same thing you will do, but ulta. Actual quantity, standard mix. Standard quantity, standard mix. But instead of standard quantity, you will put budgeted quantity. So, actual quantity, actual mix. Budgeted quantity, standard mix. These are two things we will compare. Now, we will proceed to question. Come to test and understanding question number 13. Someone read the question. Marginal costing system, what has to come to your mind? Into the standard margin we are putting no. That standard margin will be standard contribution. The third column normally we put standard price, but for here we have to put standard margin. Margin will be contribution. Next. Okay. Okay. Okay, I'll leave that. Budget production and sales and given. Okay. Actual contribution is given. Actual production and sales are given. Calculate the following variances for the last one by one we will do. First, what we have to find out? Sales mix contribution variance. What is the first column? First column, material name. Next, material name is product name. It is material. Here it is product name. What are two product names? S and T. Next what? Actual quantity, actual mix. Here we will compare actual mix and standard mix. So actual mix will put for actual quantity, actual mix. What is the units? What? Actual quantity, actual mix. What is the units? Exactly, they gave directly. Actual quantity given to us is actual quantity and actual mix. 9,500 and 11,000 is actual quantity and actual mix. Now what we have to do? Next step.
We have to find the standard quantity for
actual quantity, standard mix. So for that what you have to do?
The
Total of that you have to take and put in the third column. Total of this we will take and put in the third column. Then what we have to do? The actual quantity split in standard mix. What is the standard mix? 8:12 or 2:3. 8:12 or 2:3. Split it in that ratio, you will get the actual quantity in standard mix. You have to multiply it by what? You will get the difference. You have to multiply it by what? Standard margin. Here it's standard contribution. What is standard contribution given to us? 5 and 6. You multiply that, you will get the variance. Please take 2 minutes time, not more than 2 minutes. Please take 2 minutes time and find out the standard. What is the answer you got? What was the answer you got? Huh? 1300 adverse or favorable? All of you got 1300 adverse. Completed. Now tell me, why did we get 1300 adverse? What is the reason?
Like we use the product. Sorry.
Tell me logical reason in your own words. Why we got 1300 adverse?
Actual quantity for actual.
In your own words. No complication required. Logically, why we got 1300 adverse? Analyze and tell.
Comparing the standard mix we have used, the actual mix lower for the higher contribution.
Hmm?
Comparing the standard mix, the actual mix we use for the highest contribution is not that much effective.
Listen, the product which gives us the higher contribution, that is 6. That we sold less, and the product which gives us less contribution is sold more. That is the only difference. Understood? That is why getting the mixed variance. Now sales quantity, what are 3 columns we will follow the columns, what are 7 columns we will put? Product. What are we comparing in sales quantity variance? What and what quantity? Actual quantity and budgeted quantity. What mix you will take? Both standard mix you will take. Okay, actual quantity, standard mix. Budgeted quantity, standard mix. Difference, standard contribution, total. Actual quantity, standard mix, where we can take it from? From previous mix variance, they can copy paste. Standard quantity, standard mix, where we can take it from? Budgeted quantity, standard mix. They directly gave to us. Directly given, 8,000, 12,000, directly given. 8,000. Remember, this is not standard quantity. Only for standard quantity, you have to do standard quantity for actual output. This is budgeted quantity. You can directly take the output. You can directly take the budgeted output. Budgeted output is 8,000, and so that complication is also not there. 8,000 and 12,000 difference, standard contribution, find the total. Do this question. It should not take more than 1 minute. Do sales quantity variance. It should not take more than 1 minute. Do it fast. Do this question. It should not take more than 1 minute. Do it fast. Completed. What variance you got? 4,000. 4,000. Hmm. Two thousand. Favorable or adverse? Here nothing is only copy paste. Understood. Now tell me, why are we getting favorable variance? Why are we getting a favorable variance? Why are we getting favorable variance? It's very easy. It's easily tell. Why are we getting favorable variance? What is that to think? What are we comparing? Actual quantity and budgeted quantity. What is budgeted quantity is 8,000 units. Actual quantity in standard is 8,200. We sold more than what is required. Product T also, budgeted quantity is 12,000 units. We sold 12,300 units. We sold more than required. When we sold more than required, obviously we will get a favorable variance only. Understood? Yes or no? Completed. Come to one more question is standard sales and quantity. Come to question number 14. Come to question number 14. So, cab company operates an absorption costing system. If absorption costing system is given now, where will it have an impact? In your fifth column, fifth column, instead of standard contribution or standard price, we will take standard profit. If it's marginal costing system, we will take standard contribution. Okay, sells 3 products, BRK. The following standard selling price and cost is given to us. Unit selling price, material cost, labor cost is given to us. Budgeted fixed production overhead is given to us. Okay. Absorb based on machine hours. Don't, by seeing a question this big, don't get confused. They have just given everything in one question. That's it. Nothing more is there. Understood? The standard machine hours for each product and budgeted levels are given below. The standard machine hours they have given. Budgeted production and sales they have given. Okay. Actual volume is given below. Actual selling price per unit they have given. Actual production and sales they have given. Leave everything. They have asked only for sales variance. Nothing they have asked extra. So anything else is not required. You tell me one thing alone. Generally, why will they give standard machine hours per unit? Generally, why will they give standard machine hours per unit in a question like this? Find out for what? Find out total hours. For what? For what? Budgeted hours you'll find out. With that, what you will do? Budget units given to us directly. They have given the standard machine hours per unit for all 3 products. What will we do with that? Why have they given that to us? How many units they gave? No. What is the purpose of the standard machine hours? Tell. Sir, they have clearly given fixed overhead is absorbed based on machine hours. So, to find the overhead absorption rate, we will do 81,000 divided by total machine hours. How will you find the total machine hours? Look at the question and tell me how will you find the total machine hours? Exactly. 10,000 into 0.3 plus 13,000 into 0.6 plus 9,000 into 0.8. If you do, you will get the total machine hours. You divide by that, you will get the overhead absorption rate per machine hour. That comes up to some amount. With that, what you will do? Why will you find? You will find the overhead absorption rate and do what? The standard rate of what? Overhead absorption rate, that is 4.5 per machine hour. What will you do with that in this question? If we have the budget of fixed overheads, you will divide you'll get the fixed budget overhead rate per hour. Again you multiply. Again, why do you have to fix? You'll go circle again, come back to the same circle. Look at the question and tell. Answer is there in the first line. Answer is there in the first line. What profit? It is rupees 4.5 per hour. You find out the overhead absorption. You found out the overhead absorption rate to be rupees 4.5 per hour. What will you do with that? And exactly. We will get answer is 4.5. Okay, you will get 4.5 as a fixed cost per hour. You multiply that with 0.3. You will get the fixed cost per unit of B. That will use to find out the profit. Sales minus direct material cost minus direct labor cost minus fixed cost will give you your profit. To find that profit, when you are doing all this. Understood? First, leave this aside. We will first find the profit. We have to multiply by standard profit. Now, we will first find the profit. What are the sales for all the three products? Selling price per unit for all the three products. Selling price per unit is right. D, R, K. 14, 15 and 18. Minus. We will start with one by one. What are the costs which is given to us? Direct material. What is direct material per unit? What is direct material per unit? We need 3 kgs per unit. That is 1.8 per kg. We need 3 kgs of material per unit, and the cost given to us is 1.8 per kg. So how much is the material cost for B? 5.4. What is the material cost for R? 1.25 into 3.28. 4.1. Next. Okay, next what cost we have? Direct labor. What is the direct labor cost? 0.5 hours required. The cost is 6.5 per hour. So 0.5 into 6.5. 3.25. Next what we have? 5.2. Next what we have? 4.55. That is 0.7 into 6.5. Sir, next what cost we have? Next we have fixed costs. Fixed overheads. Not normal overheads. Fixed overheads. First, we have to find the fixed overhead absorption rate. How do we find the fixed overhead absorption? Fixed overhead absorbed based on what? Absorbed based on total machine hours. So, fixed cost 81,000. What is the total machine hours? Total machine hours is 0.3 into 10,000, 0.6 into 13,000, plus 0.8 into 9,000. If you add all three, what you are getting? If you add all three, what you are getting? 18,000 you are getting. So, 18,000 machine hours. What is the total fixed cost? 81,000 divided by 18,000. If you put, what is the rate you are getting? Overhead absorption rate is equal. Fixed overhead absorption rate is equal to rupees 4.5 per machine hour. You have to write clearly. That's why from starting of the chapter I have been telling you in the ABC costing chapter, overhead absorption rate is equal to 4.5 rupees per machine hour. How many machine hours are you using in product B? 0.3. So 4. Look, come to direct labor. No. Direct labor, they gave 0.5 hours at 6.5 per hour. No. That's 6.5 hours. That is what we found out right now. In direct labor, the daddy gave no. Like that, we are finding for fixed overheads. So we found out it is 4.5 hours. So 0.3 hours at 4.5 hours. 4.5 per hour. 0.3 hours we are using at 4.5 per hour. We are finding out that how much you are getting 0.3 to 4.5? 1.35. Next, what you have? 2.7. That is 0.6 into 4.5. Next, what? 0.8 into 4.5 is 3.6. You minus all these, you will get your profit. Sales minus all these costs, if you do, you will get your profit. Profit comes to 4, 3 and 5. This is your standard profit. Understood? To find the standard profit, we have to do all this. Understood the question? I think the rest of the question I will be able to do. What is sales price variance formula? Sales price variance. Minus standard price into actual quantity. What is sales volume variance? Sales volume variance is classified into two: mix and quantity. Mix and quantity you find, add both, you will get a volume variance. If they have not given that, what is your sales volume variance normally?
Actual quantity minus budgeted quantity is standard quantity.
into standard profit. Understood? That also you can do and you will get the same answer only. I will give you exactly 8 minutes time. Do this entire question. Do it fast. Okay. Can you proceed? Completed question number 14. Check. Okay. Ready. So now we will move on to the next concept called as planning and operational. Very easy. No new variants to learn here in planning and operational. Nothing new here. Just two differences we will see. Sir, planning and operational, what we are going to see here is budget. When we will set, by budgeting sell 10,000 units this year. When will I set that budget? One second. Check. Budget, when will I set? In the start of the year, I will set a budget. Suddenly, something might happen in the economy. For example, I am a phone manufacturer. I budgeted to sell 10,000 units. COVID came. Now everyone wants phone. Now I budgeted 10,000 units, but I can actually sell 40,000 units in the year now. Comparing the budget and actual will not be right now. Comparing the budget and actual will not be right now because a lot of situations have changed. Same situation throughout the year now, we can continue 10,000 as a budget. But what happened? A lot of situations have changed. So we should technically change our budget. A change of budget is what you are going to see here. So original we will have a budget. We will have revised budget. Normally what we will calculate original budget and actual we will compare. Normally original budget and actual we will compare. But now we will compare original budget and revise the budget. Same formula we will use. There will be no change in formula. But instead of taking original and standard, original and actual, we will take original budget and revise the budget. That is one variance. Revise the budget and actual, that is one variance. But formula will remain the same. Formula will remain the same. So, okay, what is the formula for material price variance? What is the formula for material price variance? Standard price minus actual price into actual quantity. Same formula here also. But first we will find standard price minus revised standard price. Second we will do revised standard price minus actual price. Standard price minus actual price, we are splitting into two. Standard price minus revised standard price first we will compare. Revised standard price and standard actual price we will compare. The standard price and revised standard price we are comparing now. That is called as planning variance. There is some problem in the planning only. When you are comparing two standards, one is the original standard, one is the revised standard. When you are comparing two standards, it means there is some problem in your planning only. So that is called as planning variance. You are comparing a revised standard and actual. That is your operational variance. Here the problem is there in your operations. Planning problem is there here. But here the problem is there in your operations. This is called operational variance. So we will call it material price planning variance. Material price operational variance. Understood? We will call material price planning variance and material price operational variance. Now tell me, what is planning variance? Comparison of original and revised is called as planning variance. Comparison of revised and actual is called as operational. All of that we have to know. Literally nothing more is there to learn. Others we can do it alone. One thing you have to remember is original budget is called as ex ante. Original budget is called as ex ante. EX-ANTE. Original budget is called as ex ante. Revised budget is called as ex post. What is original budget? Repeat all of you. What is original budget? Ex ante. What is revised budget? Ex post. Ex ante and ex post. Understood all of you? Yes or no? Sir, who's responsible for a cost going up? Generally, who's responsible for a cost going up in a company? A cost going up. I budgeted my material to be 10,000. It came out to be 10,500. Who's responsible for it? Some manager, procurement manager. I was supposed to tell 5,000 units. I sold only 2,800 units. Who's responsible for that? Sales manager. I can go and ask sales manager if something bad happens because I put him for that only. But I will not go and ask him if there's problem in the planning variance. I will go and ask him only if there's problem in the operational variance. Suppose I am a restaurant or whatever it is. I have budgeted to sell 10,000 units, 10,000 plates of fried rice this year. I actually sold only 9,000. I actually sold only 2,000 plates. But what happened is, COVID came. Because COVID came, we again all of us sat down. We revised the budget to 4,000 units. Originally, I budgeted to sell 10,000 units. COVID came. We all sat down again and revised the budget. Once we revised the budget, we decided to sell 4,000 units. I actually sold only 2,000 units. Manager is responsible for what? Manager is responsible only for the 2,000 units. You are revised the budget is 4,000 units, but you actually sold only 2,000 units. Why did you sell 2,000 units? Let's say I can go and ask the manager. I can catch a scholar and I can ask the manager, why did you sell 2,000 units less? But original budget is 10,000 units. Revised the budget is 4,000 units. That 6,000 units is not in his hands. Corona came, COVID came. What will he do? When COVID came, what can he do? It's not under his hands. So that planning variance, you can't question anyone. It is the organization's fault or some environmental fault. But operational variance, you can go and ask. Understood? That is one thing you have to remember. What is original budget called as? Ex ante. What is revised budget called as? So now you understood what are planning and operational variance now. One more thing. I decided to sell. Okay, we'll first complete material and then come to sales. We'll complete material variance and then come to sales. Nothing. We have material price, material usage, Along with it, we will find material price planning variance, material price operational variance. Material usage planning variance, material usage operational variance. Same for labor. These both we will find out and then we'll come to sales variance. Come to question number. Come to question number. Come to question number, test your understanding, question number 18. Come to test your understanding, question number 18. What are the given is standard cost per unit of a raw material is estimated to be 5.2 per unit. However, due to subsequent improvements in technology, the general market price became $5 per unit. The actual price paid was 5.18 per unit. 10,000 units of raw materials were purchased during the period. First, how you have to write, I'll tell you. Visualize alone. What is material price variance? Actual price, the actual content. So what you write? First write standard price above, leave one gap, then write actual price. In middle you will write revise the standard price. You will revise your price. In middle you write revise the standard price. Normally you will do standard minus actual. Now we will do standard minus revised standard minus actual. Now students will get confused in that. Actual minus revised standard pannuma illa revised standard minus standard pannuma, they'll have a doubt. Do not have a doubt. First write standard, write actual. You will generally do standard minus actual. You will generally do standard minus actual. Now you will do, now put revised standard in between. Standard minus revised standard minus actual. Understood? I will come to it. What is the, okay, read the question and tell me what is the standard price we initially thought? 5.2 rupees per unit, what we initially started. What happened is, due to subsequent technological improvements, the general market price became 5. What is that? Revised standard. Because of something, the market price only came up to 5 rupees. Okay. The actual purchase price was how much? 5.18. 10,000 units of raw materials were purchased during the period. What is this? Actual quantity. So, if this planning and operational variance didn't come into picture, would you have appreciated the manager or would you have scolded the manager? No, if we don't treat planning and operational variance, would you have appreciated the manager or would you have gone against the manager? Exactly. Leave favorable, adverse, whatever. Standard price was supposed to be 5.2. But manager bought it for 5.18. He bought it for 0.2 rupees less, 0.02 rupees less. We'll appreciate him. If we do not see planning and operational variance. After seeing planning and operational variance, we'll see what happens. First, what is planning variance?
5.2.
Not planning variance. What is material price planning variance? What is material price planning variance? What is the formula? Visualize and tell what is the formula? Huh? Standard price minus revised standard price into actual quantity. Into actual quantity. What is standard price? 5.2 minus revised standard price. 5. Revised standard. Into what is actual quantity? 10,000. What you are getting? 2,000. 2,000 is your favorable adverse. Favorable. What this favorability means is our budget is better than the revised budget. That is what it means. Our planning is better than what's new, something has happened. So budget is good, no problem. Now we will find material price operational variance. MPOV. Material price operation. What is the formula for material price operational variance? All of you repeat. What is material price operational variance? Revised standard price minus actual price into actual quantity. What is revised standard price? Minus what is the actual price? 5.18 into 10,000 units. What you are getting? Adverse of 1,800 adverse. Which one will you catch the manager? You will catch the manager for material price planning variance and material price operational variance. Because operational variance only is under his control. Planning variance not under his control. So you go and ask him, look, operation is the problem. 1,000 adverse is there. Make sure you change the next time. Overall, what variance are you getting? 200 favorable. 5.2 minus 5.18 standard price minus actual price. 5.2 minus 5.18 is 0.02 into 10,000. You will get 200 only. So you add these both variances, you will get material price variance. You add material price planning variance and material price operational variance, you will get material price variance. Understood? Yes or no? Which is under our control? Tell clearly what operational variance here? Material price operational variance. What is not under control? Material price planning variance. What is original budget called as? What is revised budget called as? Post. Understood? Do question number, test your understanding, question number 19. They are telling you to find material and usage variance using traditional method. Normal material price variance find out, normal usage variance to find out. Then you find all planning and all operational material variance. All planning, all operational variance. What is asking you to find out? Material. Under planning variance, what are the two variants will get? Material price planning variance and material usage planning variance. Here you will have material price operational variance, material price, material usage operational variance. First you find out, you tell in your mouth only, what is normal material price and usage variance? Material price and usage variance. See this and tell. Homes. What was your dose? The standard cost per unit is 28. Okay. Next, standard material cost per unit is 7 into 4, 28. 7 kg per unit is required. Per kg is 4 rupees. In the middle of there, something changed because of the revised standard. The revised standard is now we need 8 kg per unit at 3.8 per kg. Actual output was 1,400. 11,000 kgs of material were purchased and used at a cost of 41,500. Leave everything. Leave the middle part. Leave the revised standard part. Look at the question and tell what is material price variance. First tell me what is the formula for material price variance. What is standard price? always you have to take, because you're going to multiply by kgs, no. You have to take the cost per kg. As you're going to multiply with the kg, you have to always take the cost per kg. What is standard price? Minus what is the actual price? That is revised standard. Leave that. Oh, you follow 3.7. 41,500 divided by 11,000 kg, you got 3.77. You can either do that, or what we can do. What is the easy method you thought you? Multiply and write. Directly you can write 4 into, write the formula first. Right, what is the formula? Standard price minus actual price into actual quantity. Bring the formula inside. Standard price into actual quantity minus actual price into actual quantity. What is standard price? 4 into what is actual quantity? 11,000. Minus actual price into actual quantity is given to us as 41,500. What are you getting? 2,500 favorable. What is material usage variance? What is the formula for material usage variance? I'll give you time to write. What is the formula for material usage variance? Material usage variance minus the actual quantity into standard price. What is standard quantity? Mantra. For actual output. What is actual output? 7 kg into standard quantity for actual output. 7 into 1,400. What you are getting? 9,800. Minus what is actual quantity? 11,000 into standard price. Into what? 4. What are you getting? This is normal material price and material usage variance. No problem we have in this. Now we will do, I will give time right at the end. Now we will do, listen to me, now we will do, one we will do. We will first do material price variance. Material price variance, we will have material price planning variance, material price operation variance. What is material price variance formula? What is material price variance formula? Standard price minus actual price. So write standard price, leave one gap, write actual price, middle you write revised standard price. What is standard price?
4.
What is the actual price?
3.7.
You don't have to find out actual price, because formula we will change the formula. For now you just write 41,500, or if you want you can write what? 41,500 divided by 11,000 kg, you will get 3.77. 3.77. Revised standard price is what? 3.8. We got this. Now, what is material price planning variance?
Standard price
Minus standard price into quantity. What is standard price minus revised standard price? What is standard price? 4 minus 3.8 into actual quantity is
11,000.
what are you getting? 2,200 favorable. Now what is material price operational variance? Revised standard price minus actual price into actual quantity. Now we'll take that inside formula, because that actual price and actual quantity we want to know. So revised standard price into actual quantity minus actual price into actual quantity. What is revised standard price? 3.8 into what is actual quantity? 11,000 minus actual price into actual quantity. I directly have, that is 41,500. Okay, minus 48. 300. Favor understood. This is how material price planning and operation variance should be found out. Now we will find out material usage. Here was slightly tricky. Easy only, don't worry. Now we will find material price, material usage. Material usage variance is classified into. First, what is the material usage formula? Standard quantity minus actual quantity. So write standard quantity, leave one gap, right? Actual quantity. Middle you have to write revised standard quantity. RSQ, revised standard quantity. What is standard quantity? Standard quantity for actual output. What is standard quantity for actual output? 7 into 1,400. What you are getting? 9,800. What is revised standard quantity? Same mantra. Revised standard quantity is revised standard quantity for actual output. 8 into 1,400. That is 11,200. Revised quantity for actual output. What is the actual quantity? 11,000. Now this minus this into standard price. What is standard price? What is standard price? 4. Again, RSQ minus AQ into 4. If you do that, you will get the 2 variances. Understood? So material usage planning variance and material usage operation variance should be found out. Yes or no?
Yes, sir.
I will give you exactly. Oh, done now. Wait, once again. Don't write now. I'll give you time to write. I'll first complete labor income, then I'll give you time to write. And labor is exactly the same, no changes. Tested understanding 21 to 21st question. We will do tested understanding question number 21 after doing that is labor is there. Under labor we have 2 questions now.
Yes, sir.
Under labor we have 2 questions now. First question we will do now. Second question we will do after completing quantitative aptitude chapter. Quantitative techniques chapter is there. Next we will do now. After completing that, remaining we will come to this question. That chapter, this chapter is connected. Understood? Come to test understanding question number 20. Sir, there we have the same formula. So what is labor rate variance? Minus actual rate into hours. Same thing. Standard rate, actual rate. Middle what you have to write? Revised standard rate. All of that. Standard rate minus revised standard rate is what? Labor rate planning variance. Revised standard rate and actual rate is what? Rate operational variance. Into you have to do actual hours. What labor efficiency? Sorry, labor efficiency variance is classified into 2. Standard hours minus actual hours into standard rate. Standard hours, leave one gap, right? Actual hours. Standard hours, middle what you have to write? Revised standard hours, actual hours. Standard hours minus revised standard hours, what you will get? Labor efficiency planning variance. Revised standard and actual efficiency operational variance. All of that. Standard hours is standard hours for actual output. Revised standard hours for actual output. With this, we are done with material and labor variance. Now we can do the previous question. Do question number 19 and then do question number 20. Do question number 19 and then do question number 20. Do it fast. Once you're done with this, we can proceed to sales variance. Now we are going to see for sales. Sales also exactly the same, no change. But sales volume variances are now. What are the 2 variances under sales? Sales price and sales volume. So sales price planning variance, sales price operation variance, sales volume price variance, sales volume operation variance. That volume alone, we will do slightly different. Not the same only, exactly same, names will be different. Sales price planning variance or sales volume planning variance, we also call it market size variance. I'll tell you why. Sales volume planning variance is a market size variance. Sales volume operational variance is a market share variance. I'll tell you the difference. I'll tell you why they call market size to market share. Listen. Earlier, first all of you know what market size and market share means. If you take a segment, for example, cement industry, they will tell, or leave cement industry, more bike industry, they will tell bike industry, the market size is random amount I'm saying $3 billion. Bike industry, the market size is $3 billion. That is, there is demand for $3 million to totally $3 billion totally. Totally, all the bikes sold into the price if you put, the market size of the bike industry is $3 billion. When someone is going to enter a business, for example, if Zudio, we'll take Zudio. If before Zudio came into picture, what Tata they'll decide is they'll sit and talk. Look, clothing industry is $3 billion industry. Clothing industry is a $3 billion industry. We should try to capture the industry. The $3 billion industry, what do they mean by that is, the entire number of clothes sold into the price of the products is $3 billion. We have to capture, Zara has 3%, Westside has 5%. We have to capture 2% out of it. That's how they come into business. The $3 billion industry, we should capture 2% out of it, means $60 million we should capture. Understood? That is what it means. The total demand is $3 million. In that we have to capture 2%, 3%, 5%, 10%, whatever. Depends on the company. So, the $3 billion is the market size. This is the market share. How much we want? We want 3%. We want 4% is the market share. Understood the difference? Now, earlier font segment we will take. Earlier font market size, they assume it to be 3. We'll see small numbers. Phone's market size, they assume it to be 30,000. Entire phone market segment, they assume the market size of the phone is 30,000. COVID came. Sudden demand for phones increased. Earlier, we used to have 20%. Our standard market share, our share in the entire market is 20%. I am iPhone manufacturer. How much do I own of the market? Don't use calculator. 6,000. 30,000 into 20%. I own 6,000. Apple iPhone. I own a market share of 6,000. 20% is my regular. How much of the phone industry becomes bigger, I will own 20%. So earlier the market size was 30,000. I owned 20%. Now the market size became 50,000. How much should I own? 10,000. Market size became 50,000. I should own 20% of it. 50,000 into 20%. How much should I own? 10,000. So I used to make a sale of 6,000. Because of market size increase, now I should make a sale of 10,000. That's 6,000 and 10,000. 6,000 is the original budget. The 10,000 is your revised budget. So difference between these is market size variance or planning variance. Market size, because market size has changed, my share has changed. But I actually sold only 8,000. So you have to compare 10,000 is how much I should have sold in the new market. How much I sold is 8,000. The 2,000 adverse is your operational variance. Understood? One question you do will understand. Nothing you have to remember. Same formula. Original minus revised. Original quantity minus revised quantity will give. Original budget minus revised budget will give you planning variance. Revised budget minus actual will give you operational variance. Planning variance is otherwise called as. Original budget and revised. That's not planning and operation. Original budget and revised budget is called as ex ante and ex post. Planning variance is otherwise called in sales. In sales volume alone, planning variance is called as market size variance. In sales volume, market operational is called as market share variance. Come to test understanding question number 15. Hudson question. Sales variance first question. Come to test understanding. Actual as first, exactly. Actual minus revised budget minus budget. Yes, correct. Okay. Now come to test understanding question number 15. In that, what has they given to us? Hudson has a sales budget of 4 lakh units. What are the 4 lakh units? Okay, first.
So actual minus revised budget is only
operational. Actual minus revised budget is operational because I'll tell you what is sales volume normal variance. Actual quantity minus budgeted quantity. Leave some space in between and write revised to budgeted quantity. So actual minus revised to budget is operational. Revised budget minus budget is planning. Understood? Now come to the question. Hudson has a sales budget of 4 lakh units for the coming year on the 20% of the total markets. So out of the total market, we own 20% and we are able to sell 4 lakh units. So what is the budgeted quantity? What is the budgeted quantity?
we own 20%.
4 lakh is the 20%. That 4 lakh what they gave us, we have a sales budget of 4 lakh units. 4 lakh is the 20%. Total will be 20 lakhs. In that we own 4 lakhs. Understood? So budgeted quantity is 4 lakh units. We are budgeting to sell 4 lakh units. On each unit they make a profit of $3. Okay, no problem. Actual sales is how much? So actual quantity also we have. We have to find only the revised budgeted quantity. Understood? Come here. But the industry report showed that the total market value had increased to 2.2 million. So the market size has increased. The market size has increased. What will be a new market share? The market size has increased. What will be a new market share?
4 lakh.
Exactly. The new market size is 22 lakhs, 2.2 million into we should own 20%. So technically we should sell 4 lakh 40,000. So revised budgeted quantity will be 4 lakh 40,000. Now you tell me the formula for sales, traditional sales volume variance. What is the formula? What is margin? Observe, they give profit. So standard profit. So what is the formula? 4 lakh 50 minus 4 lakhs into 3. Now switch into planning and operational. Sales volume planning variance. Revised budgeted quantity minus budgeted quantity into profit. What is revised budgeted quantity? 4 lakh 40,000 is what we found out. Minus budgeted quantity is how much? 4 lakhs. 40,000. 40,000 into 3. What is operational variance? Sales volume operational variance. Quantity minus revised budget quantity into standard profit. 4 lakh 50,000 minus 4 lakhs into 3 into 3. Understood? So that sales volume operational variance is called as market share variance. Our share has reduced or increased. Sales volume planning variance is called as market size variance. Understood? Only for volume, not for price and all. Only for sales volume variance we call market size and market share. Understood? Another question, test another question number 15. I'll give you time to write. We'll do 3 questions at the same time. Now test us any question number 16. Next question. Next question. What are they given? What are they given? A company. Okay, first what are they asking? They're asking sales price volume. Normal sales price volume. Analyze the volume variance into market share and market size. What is market share? What is other name for market share? Sales volume operational variance. What is market size?
Sales volume planning.
Okay, good. Discuss the price variance also. They want us to split it into planning and operation. We'll leave the normal variance. We'll directly find planning and operation variance. We'll start with sales price. What is sales price formula?
Sales prices. Actual price minus standard price into
Actual price minus standard price. Leave middle actual price, revised standard price and standard price. Actual price minus revised standard price will give you what? Actual price minus revised operational variance. Sales price operational variance. Revised standard price and standard price will give you what? Sales price planning variance. We have to multiply it by what?
Standard.
Multiply it by what?
Actual one.
I want to multiply it by what?
Actual quantity.
Okay. Now come, just 1 second. Now come. What is actual price? First we'll go through the question. Sales budget is $14. Budget is $14. Sales volume is 250,000 units. Competition was more intense and they are expected to achieve only 220,000 and had to sell at a discounted price of 12.5. The company was unable to reduce the cost, so the profits fell from 4 to 2.5. Okay. They estimated that the total market volume grew by 10% from 1 lakh to 1,10,000 units. Okay. So what are they asking? They are not asking sales price variance only. What is asking the question? Third part, what are they asking? C. Discuss whether the price variance is a planning or operation. The price variance, whether it's a planning or when will it be a planning variance? When we can control it. When we cannot control it. Planning we can't control. Operating only you can control. So here what they have given is, sir, my price was 14, it reduced to 12. To achieve certain number of sales, we had to reduce it at a discounted price of 12. The company was unable to reduce the cost, so the profit fell from 4 to 2.5. They are asked me to find the sales price variance and all. Just tell whether this is planning or operational. You see and tell. It is planning only because it is not in their hands, sir. They expected to sell it for $14, but they were able to sell it for $12 cost. Only if they sell it at the discounted price, they will be able to sell at least 220,000 units. Understood? It is not under their control. So hence it is a planning variance. You write some story about it. 3 marks they will ask. Write a story about it. Understood? Nothing more is required here. Now we will proceed to second part. Second part, what they are asking?
Analyze the
Volume variance into market share and market size. Analyze the volume variance into market share and market size. What are they given?
market share.
So what is volume variance formula? What is the volume variance formula? Actual quantity minus budget quantity. Middle what you have to write?
Actual quantity,
Revised budget quantity. Okay. So we have to find three things. We have to find budgeted quantity, actual quantity, and revised budgeted quantity. What is budgeted quantity?
2,20,000.
Budgeted quantity is 2,50,000. Super. We have in the question. What is actual quantity?
2,20,000.
2,20,000. Here the problem is to find revised budgeted quantity. Sir, earlier question, how did we find the revised budgeted quantity?
So we look from the market volume, total volume. Here we can find it.
I will correct. Previous question, how we found out?
2.4.
The new market size. New market size into what was our share. This line is very important. You write it somewhere. New market size into what was our share. Correct? In the previous question, they gave our share was 20%. In the previous question, they gave our share was 20%. In this question, we have to find our share. How will we find our share? Exactly. We are able to sell 2,50,000 when the market size was how much? 1 million. Understood? So how much share did we have? How much? 25%. Exactly. Understood? Our market share was, we used to sell 2,50,000 units and the market size was 1 million. That is 10 lakhs. So our market share was 2,50,000 divided by 10 lakhs, 25%. Understood? Now if you see, the market has grown to 1.1 million. 1 lakh, sorry, 10 lakh, sorry, 11 lakhs. 11 lakhs. What is our share? What is our share? 25%. Into 25%, if you do what you are getting? 2,75,000. So revised budgeted quantity is 2,75,000. 2,20,000 minus 2,75,000. You will get your actual minus revised budgeted quantity. Into what you have to do? Into what you have to do? Into what you have to do? Tell me the formula. Actual quantity minus revised budgeted quantity into standard profit. Here profit is equal to what? Standard profit, actual profit. Standard profit. What is the standard profit in this question? 4. Exactly. Our standard profit was 4. Our actual profit is 2.5. So actual quantity with revised budgeted quantity into 4 rupees profit. Revised budgeted quantity into budgeted quantity into 4 standard profit. Understood? If you do that, you will get your volume variance into market size and market share. Understood? You will be very careful in the question. They have clearly told in the C part that we have to decide whether the price is planning or operational. They are not asking you to find planning or operational. You have to decide whether the price variance is planning or operational. Understood? Sir, in that question, we cannot find planning and operational variance in price because only we have 2 price. We have 14 and we have 12.5. With 2 price, you cannot find planning and operational variance. Understood? That's why they clearly ask you to discuss whether it's planning or operational. We can find planning and operational only when we have 3 price. Actual price, revised standard price, standard price. Here we have only 2 price. So the 2 price they are asking is the planning or operational problem they are asking. You have to write that. Understood? Yes or no?
Yes, sir.
Oh, nothing more is done. I'll give you time. We'll do next question and then I'll give you time to write together. We'll do next question and then I'll give you time to write together. Understood, all of you?
So here the statement the company was unable to reduce costs was written like that, but we have to look at only sales, like whether it is controlled by the company or not.
The company?
They gave that the company was unable to reduce costs that time.
Unable to reduce cost, the profit fell from 4 to 2.5, yes.
Okay. Like in this concept, we have to look at whether the company is able to control sales or not.
For that one, you did planning and operational, no?
That is the concept. We should not look at the cost part. We have to look at the sales.
Sales part only. Sales volume will take profit only. Cost will not worry about. Will take only profit. Cost is not required for us only. For us only profit is required because we multiplying only by standard profit.
Okay.
Understood? Because why we are technically for everything we took price, why along for sales we are taking profit is sales volume variance. They don't want you to find out how much sales we lost this year. They want you to find out how much profit we lost this year or how much contribution we lost this year. They don't want you to find how much sales you lost. It doesn't matter.
Okay.
After everything going, how much profit you lost this year because of this they are asking. That's what you're finding out. That's why for sales variance, you're taking profit or cost contribution. Understood?
Yes.
Beautiful question. We have sales quantity variance. We have sales. Come, we will do next question. Nice question. We'll just do what is required. We need not do everything. We'll just do what is required. First question, what are they asking? First, we'll see what is given in the question. It operates an absorption costing system. What do you mean by this? Profit, huh? Alpha company. 5 MCQ will be there. Not there, huh? Not there, wait, I will send you. So tell me one of your number now. I will send you this one. 600. Put it in the group. Ready? Go to test and any question was 17 in the PDF. I don't know why they removed this PDF unnecessarily. Open? Okay. All of you open? Come to Alpha company operates an absorption costing system. Why have they given that? Where will it get affected? Which formula? What volume? Sales volume variance. We will multiply by standard profit. Sells 3 products. Each product line is managed by divisional manager. Okay. Who is responsible only for her or his or her line of products. Sales budget information is given below. We budget A, B, C 3 products are there. We budgeted to sell so much. We got so much. Okay. What is the sales quantity variance? What is sales quantity variance formula? What are the 2 variances under sales? Main. Huh? Sales. Price variance and? Price and volume. Volume is classified into what? Mix and quantity. Mix and quantity. That quantity only what we are going to do now. Quantity, what will be the headings? More product. Next, what will compare in sales quantity variance? What quantity? Actual quantity, budgeted quantity. Actual quantity in standard mix, budgeted quantity in standard mix. So AQ, SM, BQ, SM. Understood? Multiplied by? Difference multiplied by? Standard profit will get a variance. What are the 3 products? Don't write, I'll give time to it after everything. What are the 3 products? A, B, C. What is the actual quantity? Which column will fill first? Normally what happens, actual quantity in standard mix, we'll copy paste from above. That. So we have to find it now. So we'll do that later. First, what is budgeted quantity in standard mix? Quantity in standard mix. Third column. Exactly, they gave to us already. 400, 600 and 1000. But standard quantity only you have a problem. You have to find standard quantity for actual output. Budgeted quantity, no problem. Copy paste. How much total? 2000. Now we have to find actual quantity in standard mix. What is total actual quantity? Don't use calculator. Don't use calculator. Don't use calculator. What is total standard quantity? 2200. 2200 should be split in the ratio of what? Standard mix. What is standard mix? 4 is to 6 is to 10. This 4 is 6 to 10 or 2 is to 3 is to 5. So 2200 into 2 divided by 10, what are you getting? 440. 2200 divided by 10 into 3, what are you getting? 660. How much you're getting? For product C, how much you're getting? 1,100. Understood all of you? Understood actual quantity in standard mix. Take the total actual quantity, split it in the ratio of 4:6:10. Difference take. What is standard profit? What is standard profit? What? 8, 6. You already take per unit 8, 6 and 4. Multiply, you will get the variance. Okay, understood. Now come to question number 2. What is asking question number 2? Market size variances are true. Market size variances are true. Okay. Okay, first, a fall or increase in the market size is uncontrollable by the management and therefore results in a planning variance. True or false? True. Market size is not controllable and it's a planning variance. True. Second, the sales volume planning variance reveals the extent of which original standard was at fault. True or false? True. They are clearly given. Sales volume planning variance reveals the extent how the original standard was at fault. Can't really know. Planning variance talks about how the original was wrong. That's what they are given. True. Third, managers should be appraised both on operational and planning variance for sales. False. Only for operational it should be appraised. Planning variance should not be appraised. Okay. So option is option A, 1 and 2. Understood? Easy. Once you know the concepts thoroughly, believe me, whatever question they ask in exam, no way anyone can touch you. Come to question number 3. Come to question number 3. What is the given? Which of the following statements regarding sales mix variance? In alpha company, not normal sales mix variance. They are asking about sales mix variance in alpha company. For that, what you have to do, Okay. We have to find out sales mix variance, but we'll try to do. We'll see if we can do without that answer. First, overall mix variance is adverse because more products with a higher profit are sold in place of product with lower profit. No other option. We have to find the sales variance. We have to find. First is not necessary that we have to find it. Without that also we can do. But here they are asking, so we have to find the sales mix variance. We'll do that also. 2 minutes will sales mix variance. How do you find sales mix variance? Tell me all of you. What will compare in sales mix variance? First we'll compare actual mix and standard mix. Actual mix and standard mix. Actual quantity in actual mix. Actual quantity in standard mix. What is actual quantity in actual mix? 300, 700, 1200. What is actual quantity in standard mix? We found it earlier. No, copy paste that. We found it 440, 660, 1100. We found out the previously. Do that. Next day, a difference you will get. Difference you will. What is difference? Difference is 140. Difference is 40. Difference is 100 positive. What is the standard profit? 8, 6, 4. 8, 4 is 320 negative, 240 positive, 400 positive. Technically, we are getting what? Technically, what are you getting? 400 plus 240 minus 320. We will get 320 positive favorable variance. Okay. Okay. Come down. Now come down. So you see this favorable variance and tell me, how are you getting a favorable variance, mixed variance? How are we getting a favorable mixed variance?
The overall mixed variance is adverse, but we are getting favorable.
Overall mixed variance is favorable only.
Here, the question they mentioned is adverse.
Wrong.
So that's wrong.
Wrong. No, you tell me. Okay, you don't have the table, no? Understood, no, all of you. So when you see that, overall you are getting overall you are getting favorable. But what they given the option? The overall mixed variance adverse. Okay, we'll come to that. Because more products with a higher profit are sold in place of products with lower profit. Leave this question. Normally, if you sell more products with higher profit, you will get adverse variance or favorable variance. Leave our question only. Any question for the matter, if more products with more profit is sold, we will get a favorable variance. We will not get adverse variance. So absolutely false. Second, the actual proportion of product B and C, which have a lower profit per unit, is more than the budgeted proportion, whereas the actual proportion of product A, which is higher profit, is low, 100% true. From table they've given, they're saying B and C has less profit. Huh? That is more than the budgeted production. That if you do the table, you will know. When you do sales mix variance, you will know. When B and C, which has less profit, more of that we are selling. A, which has more profit, less of that we are selling. That is what they've given here in terms. Understood? Third, providing a manager with a sales mix variance when they can only control one product is meaningless. True or false? True or false? Providing a manager with sales mix variance when they can only control one product is meaningless. True or false? True, sir. A is responsible for product A sales. B is responsible for product B sales. C is responsible for product C sales. You can't go tell B saying that look, C's proportion is low, and like that you can't go same. He is responsible only for his product. So forum sales mix variance is meaningless. 100% true. So option is B. Option 2 and 3. Understood? I'll give you time to do all of these questions. First I'll complete, then I will do. Then I'll give you time to do. Next step. A recession in 2014 meant that market for all the company's products declined by 10%. What is the market size variance? First tell me what is the market size variance formula. If you forgot the formula, you first write down the volume variance. What is volume variance formula? What is volume variance formula? Minus budgeted quantity. Middle you write revised budgeted quantity. Planning variance means revised budgeted quantity minus budgeted quantity. Correct? What is budgeted quantity? What is budgeted quantity? They're talking only for product B. They clearly given. They're asking only for product B. 600. What is revised budgeted quantity? 10% is reduced. The demand for 10% reduced. Original budget 600. Now the new thing is 540. So now what is planning variance? 540 minus 600 into what you have to do? Standard profit. What is standard profit of product B? 6. So 360 adverse. Check your answer. All of that. 8 marks is there in our hands in not less than 5 minutes. 8 marks is there in our hands in not less than 5 minutes. We'll get the other 2 marks also in the next 2 minutes. See. The recession meant that the market for same question they've given, they're asking for market share variance. What is market share variance formula? What is market share variance? Market share variance, other is called as what? We have actual quantity minus budgeted quantity is our normal. Put revised budget in between. So what is market share variance? Actual quantity minus revised budgeted quantity. Actual quantity minus revised budgeted quantity into standard profit. What is that? What is revised budgeted quantity? 540. We just found out. What is the actual quantity? 700. What is standard profit? 6. Same thing. 700 minus 540 is 160 into 6, 960. How much time it would have taken you? It will take you now to do this question. You tell honestly. Now, how much time will it take you to do all the 5 questions? This 5 MCQs. 5 minutes to maximum 10 minutes. 10 minutes, we are already there with 10 marks. One question you can take 1.6 minutes in exam. 1.6 into 10 marks, 10 mark question. No. 2 marks, no. Each question is 2 marks. So each question you can take 3.2 minutes. Each question you can take 3.2 minutes. Okay. Into, we have 5 questions. You can totally take 16 minutes for this question. If you finish this question 5 minutes or 7 minutes, you can save literally 10 minutes for this question. Understood? We are technically done with this chapter other than tested understanding question number 21. Other than tested understanding question number 21, we are technically done with this chapter. Nothing more is required. Nothing more is required. They have given a lot of unnecessary stuff below. Nothing of that is required. One thing we have to know, One more theory, one part of one small theory we have to know. Other than that, nothing will be required. Huh? Wait, we'll finish this. Only one small theory. One small theory, then we are done with this question. Listen to me. Now we are going to see types of standard set. We have 4 types of standards. One is called as an ideal standard. Technically, for a good business, there should be a standard. Like that will be there now. That is called as an ideal standard. What happens ideal standard is, sometimes employees get demotivated. When I go and tell ideally, when I tell you guys ideally you should study for 14 hours a day now, you get demotivated. Huh? I will tell. What is the name? It is called as ideal. The name only is called as ideal. That's how it should be. There are chances that they may get demotivated. I'm not saying they will get demotivated. But that should be an ideal standard. Understood? Second is current standard. Current standard is based on what they're doing, they'll change the standard. Based on what they're doing, they'll keep changing the standard. That is called as current standard. Third is attainable standard. It need not be ideal, but it should be attainable for the employees. Higher standard might be ideal. Higher standard should be ideal, but it might not be attainable in some cases. So third one, they brought a new standard called as attainable standard. Standards can actually attain. There is some motivation for them to attain. Understood? Those are called as attainable standards. And last is called as basic standard. Basic standard is, they're saying they'll set the base. They'll be like, for example, study for 5 hours or daily throughout the 3 months. I'm not asking you to study for 12 hours now, 13 hours later. Study for 5 hours, the basic standard, but throughout the period of 3 months you have to do. So long term, you will set a basic standard. So what are 4 types of standards? Ideal standard, current standard, attainable standard, and basic standard. Nothing more is technically required. Whatever else is there, we'll cover that in while doing exam key questions. It will be covered. Nothing more is there. Or this are logical only. We're just done with advanced variance. After one question we will do. After doing quantitative techniques, we'll complete that and then we will do. First, you complete the 5 questions which are pending.